when you go get a traditional loan through a national bank, they only want to give you about 60 to 65% loan to cost, the cost to build. And you can go and do a HUD loan and get 80% loan to cost, and at like a 6.5% interest rate, which is substantially lower than the vast majority of national lenders out there right now. Congress averts partial government shutdown. They approve a $70 billion HUD funding. Now, HUD is housing and urban development here in the United States. And HUD funds a lot of different things related to housing. In fact, right now, one of the most advantageous new construction loans that we as developers can get are HUD loans. The problem and the caveat to the HUD loan process is that it's very lengthy and takes a long period of time to get. The proper way to do HUD loans for construction is to actually start them when you start your pre-entitlement paperwork. When you're starting to get zoning, you're working on your density, you don't even have a real project yet. It's when you start your HUD loan with the proposal of what that project will be, because it takes about 10 to 12 months to go through the entire HUD parameters in order to get funding through HUD. But you have a bandwidth of really inexpensive capital and a lot more leverage on your actual builds and installs. And one thing that's really cool is that right now, where the national banking industry, when you go get a traditional loan through a national bank, they only want to give you about 60 to 65% loan to cost, the cost to build. And you can go and do a HUD loan and get 80% loan to cost, and at like a 6.5% interest rate, which is substantially lower than the vast majority of national lenders out there right now. Now, it just so happens that the current bills that got approved nationally by Congress right now, the $70 billion, I want to talk to you guys a little bit about the HUD spending bill and how the maintenance is on where those funds are going and where they're maintaining these funds and allocations for the 2024 fiscal year. And so there's a lot of different financial distribution of the $70 billion, but $32.39 billion of it is for tenant-based Section 8 vouchers, which means that if you have a rental property and you want it to be a low-income housing facility that also takes Section 8, that will get us through September of 2024 and allow more rental assistance into the year. Now, they were disappointed with a few of the bills, which we'll go over here. So there's a few sections to this bill that the National Association of Home Builders was extremely disappointed in, and I'll explain to you why and how that affects ground-up development here in just a moment. But let's talk about this financial allocation. So Section 8 housing is one big piece of the puzzle. The second is $16 billion is projected to go to rental assistance programs to renew housing contracts serving 1.3 million households, ladies and gentlemen. That's also part of the Section 8 Housing Act. Now, the HUD spending bill will fund the agency through September of 2024. So it doesn't quite get us all through the entire year, but it does give a great push into 2024. $1.2 billion of that will go in for home improvement partnership programs, which is $250 million below the fiscal year of 2023. $3.3 billion for community development block grant programs, okay? So those of you guys that are looking for community grants, these help out developers. These also help out a lot of small development grants for like road infrastructure and stuff where there's either urban or semi-rural developments on a county level, a city level, or a state level. These funds will help in that regards. Now, we're looking at this from a perspective from development, and everything that we do, the vast majority of it is ground up construction. So one of the big things is I look at, where is this money being allocated? And some of the areas that it's allocated, you may not even realize are as important as they actually are. And so when we look at this, I'm looking at like the special risk insurance program, which actually $35 billion is going into to fund the general and special risk insurance program. $550 billion limitation on guaranteed loans to the government's National Mortgage Association, which provides $54 million to carry out the program right now, okay? Congress also approved the fiscal year 2024 spending bill for several other government agencies, including agricultural, the FDA, the Food and Drug Administration, commerce, justice, and science, energy, and water development. Okay? Now, energy and water development are super important in development because without water infrastructure going in, you can't get clean water to some of these rural areas. And when you're going in from a city area into these farmlands where typically it's irrigation water, it's not drinkable, it's not potable water, we need water infrastructure. Now, our power grids, ladies and gentlemen, when we're talking about energy and we're talking about power, and we're looking at these HUD funding bills, it's super important for development. And that is one area that actually really disappointed the National Association of Home Builders this year. And one of the main reasons why is because part of the Senate's energy and water spending bill, it kicked back $1.2 billion that was supposed to fund the energy grids. And so when you talk about infrastructure of electrical lines and you look at the power poles and you look at these energy grids, you can only extend so much power and so much transformer off those grids. Now, if we get halted and we get limited on how much grid growth there is, then you can't build the housing that you need. So why is the National Association of Home Builders concerned about this? And why should you be concerned about this if you're doing ground up construction, development, or even if you're doing fix and flips or value add? Because right now, ladies and gentlemen, there is such a housing crisis that we're looking at this from a perspective like, how are we going to get to meet the housing needs 5 years from now, 10 years from now, and today? And with the power grids being underbuilt and no funding going towards the expansion of these power grids, they're talking about a 5-year bottleneck in these power grids and the underdevelopment of them for 5 years. So in the 2025 bill, this will be a specific area of interest for the National Association of Home Builders that the lobbyists will really hyper focus on. Because the power grids and energy is one of the most sought after and needed areas in residential development. Now, you can go in and build a house with no gas, and you can do it energy efficient, and you can do everything you need to do effectively with electric. But without a power grid, ladies and gentlemen, you can do solar, but you can't collect the solar energy that's produced and redistribute and resell it. So it's only limited to that one residential home. And the way solar works for the vast majority of people is they have solar collectors. The solar collectors harvest energy. Energy goes back in through the meter, and the energy companies sell it back to other homeowners or other businesses. And so it helps power these grids. And so one of the things that we want to make sure that we lobby for as developers, as real estate investors, knowing the cusp that we have on housing right now, this can play a big part on inflation. This can play a big part as far as how many rooftops we have for investors to purchase over the course of the long haul and short term. And so one of the things that we need to pay attention to next year is this energy bill and how they get funded to be able to go out and allocate capital for these energy grids. That $1.2 billion would boost the production of needed distribution transformers that did not make the financial package this year. So we'll look for that in 2025. Some of the other funding that this bill funds is defense, financial services, general government, homeland security, labor, and legislative branches. Now, that $1.2 billion doesn't sound like a lot of money. And when I talk about these power grids, it isn't the actual equipment for the power grids, it's the labor. This funds the actual labor to be able to get people out there working on building these power grids. And it's one of the most needed areas of development and infrastructure that's out there right now that we're in need of. So pay attention to it as investors. Now, ladies and gentlemen, the National Association of Home Builders is one that you should follow for strategic information about lumber prices, the volatilities in commodities that relate to construction materials, how this affects inflation, housing prices, how it's affecting the resale values, and the market stimulation of homes, development predominantly, and ultimately the delivery of those in resale to the end user. Now, with that said, ladies and gentlemen, one of the biggest things that we need to pay attention to for the 2024 summer is lumber prices. They're extremely low right now. Lumber prices and construction prices have softened a little bit, and rightfully so. The market has softened a little bit with interest rates going up, but not so much that it's not stimulating our spring of 2024. Now, one of the big things right now is that we had a halt in the market in early 2024 because of high interest rates and the Feds stating that they're going to lower interest rates to come down and help are mortgage rates. And so people have been waiting for these mortgage rates to come down and patiently sitting on the sidelines, not purchasing single-family homes. So the January numbers were really low. February numbers were modest. March numbers have improved a little bit, but we're expecting a really strong April 2024. More to come in that regards. So watch for that video as we move and migrate into our April market updates. And for more information just like this, click below, subscribe to our YouTube channel, comment, give us some feedback. But before you leave, pound that thumbs up button. And ladies and gentlemen, at the end of this video, I'm going to give you guys more content about the need for single family housing and how you, as an investor, can position yourself to profit in single family and multifamily, residential, ground up development, and value add investments throughout the 2024 calendar year. And as we migrate through these crazy, uncharted territory of high interest rates and a transition, an election year in 2024, to see how it's going to affect 2025. Click below, subscribe. I look forward to seeing you guys in a few weeks for our market update for April 2024.